Hey,
What's up,
how's
buddy?
it going?
Good. How are you?
Pretty good, not too bad. Starting off the week.
Yeah, Monday.
You know, any news? Did you hear any news today?
Ray Dalio is now recommending 15% BTC allocation.
I did see that.
That's pretty sweet.
Yeah. How much signal do you think he is to like Wall Street?
He's quite a bit of signal, I think.
Francis, if you could mute that, I think we could hear you in the background. But
oh, that's us.
That's not coming from me.
Yeah, that's us.
Damn, we sound good.
We'll listen to ourselves for a minute here.
Well,
Oops. I don't know if I should keep looping here.
maybe you have like a window open with YouTube or something, because it's not coming from me.
I think you, Cedric. That is Cedric.
It was me. All right, well,
Is the camera
malfunction.
too
Sorry
high?
about that.
Is the camera too high, Cedric?
The camera is too high today. So you were mentioning Dalio and the 15% allocation.
Mm-hmm.
I mean,
Yeah, I think he is a signal. He's a signal to a lot of boomers too.
yeah, I mean, like the S&P 500 crowd, the index
Yeah.
crowd.
I mean, he's very well
I mean,
respected.
15% is a much larger allocation than Wall Street has kind of ever really said.
Yeah.
Around 1, 2, 3, 5%, something like that.
Oh, and I think Edelman, the big RIA, CFP portfolio managers, up to like a 60% or something allocation.
That's crazy. So it's wild to see this happening.
It's awesome.
It's moving fast. Maybe. Well, this is BitcoinCenter. I'm Cedric Youngelman.
I'm Paul Tarantino.
This is brought to you by Byte Federal.
Go bank yourself.
Crypto wallet, point of sale, ATM.
All right. Question number one. The Satoshi-Era whale that sold cashes out of 80,000 Bitcoin on Galaxy. Why dump on the market with an estimated 200 to 300 spread?
This one's strange. And this was done with very local liquidity, I think in the middle of the night. But large sort of OTC sale at once, it seems like. And it seemed to impact the price about 3 to 5% or something like that. What I wonder is what we don't know. So, they're saying the $200 million sort of slippage here on the total sale, but we don't know how often these coins were sold before. They could have been sold on paper many moons ago. We don't know if the person who held them from the beginning is the same person who sold now.
True.
Right. I mean, they could have been a private sale of just the address.
Somebody knows.
Things like that. Well, and I think I saw Richard Byworth talking about how he didn't think that this was sort of slippage. Maybe he thought that Galaxy was sort of using their proprietary desk to capture these coins at a lower price. Maybe they're the buyer.
Well, and I saw somewhere that there were like-in-kind buys on Coinbase happening simultaneously. I mean, I don't know what it all means.
A lot of people are wondering, is it a large institutional buyer testing liquidity in the market? And I don't know if someone would spend 200 to 300 million to just test liquidity like that, unless there was some other play.
I have no idea.
Like I'm saying, maybe Galaxy had options, short or
right.
We just don't know all the pieces here.
That's a good point.
So I just think that's very hesitant to say, oh, this one thing happened and led to it was a poor decision for them or something like that. We don't know who they are and what the other pieces were here.
If it's a big stack from a big trader, there's lots of ways to make money with that.
Yeah.
Right?
Well, let's head to the other one.
All right.
So Stretch.
Yeah.
Saylor expands the treasury options from strategy, which Stretch. And is he effectively turning Stretch into a sort of a synthetic currency?
I don't really see it that way. I see it as a money market riding on top of Bitcoin. So like a high yield money market. And I'm really curious actually to talk to our guest here, Tim, about this idea, right? Is Saylor building a yield curve with Bitcoin as the central bank within his company? Is this like a model of future finance with Bitcoin?
Yeah, I mean, I would definitely say that he's building out the yield curve. I might be more in Cedric's camp as far as like, could you describe it as a stable coin? I guess if they're trying to peg it at 100, how do you get a 5x oversubscription? Well, price it at 90 and tell the market you're going to peg it at 100, right? People
Mhm.
leave other products, even other preferred strategy products, potentially to scoop up 9, 10, 11% in a couple weeks.
I got a question. Can you explain to us how strategy is going to pay the yield on Stretch?
Ooh, man, talk about being in the hot seat. I mean, they could do it from a couple different mechanisms. The most likely being selling any of the preferred or common stock ATMs into the market to make those coupon payments.
Okay.
More about maybe like if it's a stable coin or sort of pegged to something. Can you maybe elaborate on that? Like, how do you sort of see what he's trying to do here, maybe in that realm?
I mean, I think it comes down to the simple arbitrage of if your thesis is Bitcoin's going up 30% a year for the next 10 years, and you can borrow money at 7, 8, 9, 10%, and there's no redemption, it's perpetual, then that's your thesis and that's what you're going on. So I think it really is that simple. You're building out the yield curve with each of these preferred tickers having slightly different terms and mechanisms, and is it do you have to pay it every quarter or not? So just different terms across this yield curve. So it's certainly not a stable coin. You could say it's more like a money market, and for not having to have a rental building, just collecting a check, getting 7, 8, 9, 10%. It's very attractive for a lot of people that need income.
So with that yield, right? It is variable, correct? And so
Correct.
is that variability going to be somewhat linked to the volatility of Bitcoin, meaning the more volatile Bitcoin is, the more yield to be able to extract? And when Bitcoin goes into consolidation phases or bear markets, the yield should come down. Is that how you see it working? I'm trying to understand how this thing's going to move.
Yeah, I mean, each of these preferred products is really targeting the fixed income market, where they're stripping out the volatility both to the upside and the downside, and just saying, hey, you're going to get a coupon payment at or around 7, 8, 9, 10%, regardless of what happens. And what I hope happens is all of that, when people get into it and they start really diving in, they're like, oh, well, this is super over collateralized. And for some percentage of those investors, hopefully they'll say, oh, but what it's super over collateralized, but what is Bitcoin? And that might be a window into them going down the rabbit hole.
That's true. And it's really, it's interesting, right? With Saylor, he keeps inventing these new products that Wall Street's never seen. And I mean, it just, he continues to surprise me with the creativity. Do you think there's more to come? More markets he's going to go? Is he going to go after the real estate market somehow, or like he seems to be targeting pools of capital, and I'm wondering where he might be fishing next.
Yeah, I mean, he said he's going to continue building out that yield curve, and if you just look at the presentation, you can see that there's kind of like spots that he can fill in, and he could also go to other markets, right? Japan is extremely yield starved, so if they only have a couple of preferred products on the entire market, and they're only getting 0.5% or a couple percent, you probably don't need to go too far above what the market is right now to really be able to tap into another maybe very, very obvious kind of pool of capital to go fishing over there.
Interesting. That's interesting.
Tim, this has been fire as always. Thank you for joining us last minute. I'll have to have you on the Bitcoin Matrix hopefully next week. Actually, I'll reach out to you with some dates, but this has been great. Thank you so much.
Thanks, Tim.
Thank you.
Be well. Well, that was interesting.
Yeah, there's I think there's a lot more innovation to come.
Yeah, I just wonder if anyone else is gonna be able to copy what strategy is doing. Any other like how many coins do you need to kind of play in that
Yeah,
sandbox?
I think there's some really creative stuff coming by other organizations that are looking at buying shell companies that have treasuries that they're going to convert into Bitcoin, buying existing Bitcoin treasury companies that maybe don't have the financial leverage that somebody bigger would have. So I think it's just this space is going to continue to evolve and get really interesting.
We'll see. It's definitely getting more dynamic.
All right.
All right.
So mixed signals, the SEC whiplash on the Bitwise ETF. Is this a regulatory mixed signal or a calculation of caution?
To me, it seems like calculated caution. I think they looked at it where these funds that they're trying to turn into ETFs, I think are like 80 or 90% Bitcoin, but they have other crypto things in them. They're shit coins, but to that market, they're trying to market these things. So they have a little bit of these other coins in there, and I think the regulatory agencies are looking at it and saying, hey, these don't have standalone stack ETFs already. So we have to be a little bit more careful about kind of letting them into the ETF world. They haven't been approved on their own.
Do you think the Clarity Act will provide guidance for the SEC on this?
I do. I think they want to push these things over the line. I think they're just waiting a minute. I'm not pro these things, but I do think that there's a market for them, unfortunately.
Yeah, for sure.
Yeah, whatever that means.
Whatever that means.
Yeah. Okay, I'm excited to ask you about this. So Jack Dorsey's Square, they rolled out Lightning for merchants. So they're going to embrace it by 2026. So it's not out yet, I guess. But will mainstream merchants embrace Lightning, I guess, by 2027,
So from our experience by Federal, right? We have a POS system.
Yeah.
We have merchants using this POS system in beta right now. And all the way from gas stations that have done Lightning transactions for gas to restaurants and others coming, both online and offline. And there is no pushback from the retailers. The retailers are all for it.
Right.
Instant settlement. No, refunds are only based on if you want to return the product to the customer or you are going to allow that refund, right? There's no sorry, we're reversing that. Right. There's no backing out of a transaction. Yep. So the pushback from merchants should be minimal. I think it's more a matter of when are people willing to spend their Bitcoin. Right. And that this is why this de minimis tax on transactions would be so helpful. So I think Square's doing something really smart. They're preparing themselves for a future where there's some amount of Bitcoin you can spend without taxation. And I think the merchants be more than happy to take a Bitcoin Lightning payment.
Yeah, I'm excited for that. Lower fees, sort of no backsies, no returns that way that you don't want to honor. So I think it makes the customer producer relationship more honest, transparent.
And Lightning is a global open network that everyone can participate in. So even Visa and MasterCard could jump on Lightning.
I do think there has to be sort of the incentive, maybe products that will only be bought or paid for in sats. So people, it's something to kind of make you want to give up your.
I think tax is the biggest thing, right?
The tax,
I think that's the biggest thing because I'm always more than happy to instantly buy Bitcoin on Lightning and pay somebody with it instantly, so that I can just turn the Bitcoin immediately without a bunch of capital gains and other garbage to deal with. So I think if that gets out of the way, I think it'll take off.
Yeah, and you can spend them in place too. Yeah. So all right, let's go on to the next one.
All right. Okay, so this is interesting. This is about Tornado Cash.
Yeah.
And Frank Corva was reporting on this from the courthouse.
Yeah.
And the question becomes, is this, how bad is it looking for Roman Storm from Tornado Cash? And I guess as a follow-on to this, is the Genius Act and the Clarity Act having any influence?
Yeah, and why Bitcoiners should be interested in this. Yeah. Hey, Frank, how's it going?
Good. How are you guys doing?
Pretty good. Thanks for joining us.
No worries. Yeah, thanks for having me. Appreciate it. What's going on?
Well, we were following you and your reporting live from the courthouse and walking down the street trying to read and walk at the same time.
Not so easy. That's not as easy as it looks. Yeah.
But we're kind of wanted to get your perspective. I guess the main question is, how does this look for Roman? Your take?
That's a really tough one to say. I just got out. I'm actually finishing up the piece for Bitcoin Magazine now. It's hard. I think today was the defense's best witness. It was a Dr. Edman. Comes from like a crypto forensics company, was talking a lot about some of the sort of faulty analysis that some of the witnesses that the prosecution brought to the stand had presented. Talked about the number of ways in which Tornado Cash was decentralized, not just the fact that the pools themselves were immutable and that the keys to those pools had essentially disappeared or were burned. There's a lot of different ways to say that. Keys and smart contracts is not like my area of expertise, but I know enough to say that those keys are gone and people can't use them. But even the way that the UI was hosted and the DAO governance and all this stuff, the prosecution is trying to say that it was essentially all in Roman Storm's control, when we know that a large portion of it wasn't. And we also know that Roman Storm took very notable steps to try to keep bad actors from using it. Like I didn't even know this until the court case started or until trial started, but at one point he even implemented an oracle that Chainalysis told him to implement that helped stop bad wallet addresses from putting funds through the UI. And again, a lot of what the prosecution is harping on is that the UI is where most of the funds flowed through. So I think 96% of the funds were going to, I don't know if it was like tornadocash.eth or whatever the website was. They weren't like, people weren't technically sort of so inclined to go and figure out how to like put funds through the pools without the UI that Storm and the other developers had created. So I don't know is my short answer. Today, though, as this very good witness was sort of describing the technology and why, Storm himself was not in control over all of it. It was tough to watch, but a lot of the members of the jury were sort of like nodding off and sort of spacing out. And the members of the jury, from what I understand from some lawyers who have been paying close attention to this, they were very carefully selected, so that there were not many people who were familiar with the technology who were on the jury. The government does not want people who are familiar with the tech to be on it, because if that's the case, then obviously they would have a little bit more understanding of why Storm wasn't in control of everything that was happening with Tornado Cash. Long-winded sort of response to what you asked, but again, it's like I don't know. I've been very clear about my own bias. I'm very much hoping that we see a not guilty verdict here, because I think it's going to have ramifications for the Samurai Wallet trial, where I also want to see a not guilty verdict. I know as a reporter, maybe I shouldn't be saying that out loud, but I very much just admit my bias in this regard. I think that privacy should not be criminalized, and I just don't think it's really fair. The judge is pretty harsh. I don't know. I'm hopeful still. It's definitely not like a bloodbath in one direction or the other. There's been plenty of places where the prosecution has stumbled and the judge has even sort of like almost pushed them while they were down, and plenty of places where the inverse was true as well, where the defense sort of got caught and didn't know what to do. So just a lot of stuff happening behind the scenes. I've been speaking with a lot of lawyers about it. They've been telling me what they think is going to happen and what comes next. But I will say this, if he doesn't get a not guilty verdict here, the fight is going to continue on another level in other courts. And there's going to be more people from think tanks and the industry that are going to get involved to support that fight. So even if we don't get what we want out of, come the end of this week, it's not over. So just something to keep in mind for everybody. The fight doesn't end here. From what I was told, I think Alexei Pertsev's, one of his lawyers was actually lawyers or one of his people. I forget how someone put it to me, was in the courtroom with us on Thursday. So Alexei Pertsev, for people who don't know, was the Dutch dev, one of the three co-founders of Tornado Cash, who is based in the Netherlands. So he was tried in the Netherlands for developing this software and the protocol. And he got 64 months in prison, but they're apparently trying to appeal that as well. So the fight exists on both sides of the Atlantic. I don't think the people who believe in this technology are about to give up anytime soon. So
yeah, it just seems so ironic to me, right? The GSIBs, these global systemic important banks, they actually get caught doing money laundering on purpose and pay fines. Right. So when you have a Tornado Cash trying to do this legitimately for privacy and they go to jail. So is that lost on the jury? Is anybody there aware of the bigger picture?
It's a great question. That's a very, very good question. I've been having this conversation with a close friend of mine a lot. I don't know. I don't know what's happening in the minds of the jury. It's funny. I was a teacher for 12 years, and I'm pretty good at reading a room. And when I'm looking at them, I'm just like, I don't know if these people know what's up and what's down right now. There's been so much terminology thrown at them. And I would say, if anything, that what you just described, that those sorts of parallels have not been drawn. So it's more like, this is what a smart contract is, and this is what a secret code is when you're putting something through a protocol. And that you could just tell that they're just like, dude, we're trying, but like, this is hard.
Yeah.
This is really
It
tough
sounds
stuff.
very nefarious to people that don't understand technology and don't understand what's being developed. Well, we hope the best for Roman. We don't want to see developers and threatened like this. So thank you for your reporting. We appreciate it, Frank.
The pleasure's all mine. Thank you guys for having me on. Much appreciated.
Yeah. Thank you so much.
Thank you.
No problem.
Wow.
Yeah, that's interesting, man. Well, I hope the best for these guys, and you know, people need to realize that you know, I guess the thing, the big takeaway is if you're gonna do something fraudulent, do it big so that you can protect yourself. Right? That's what the government keeps telling us.
Yeah, I hear you.
The small guy gets screwed all the time.
Yeah, well, we'll see what happens. Good luck to Roman. We got to go to the lightning round. This center brought to you by Fight Federal. Thank yourself. All right. British gold mining company Nativo Resources announced they will establish a Bitcoin treasury.
Yeah.
Oh, gold bugs finally surrendering to Bitcoin.
This one is. No, I think there's a lot of gold bugs that are finally seeing the light with Bitcoin. This is going to be a treasury asset for them, right? And they did mention that they're doing this because they want to combine the stability with gold with the scarcity of Bitcoin. And that they see it as a hedge against monetary debasement. So, you know, I mean, it's smart, right? You can dig gold out of the ground, which is a nice inflation hedge, and then lever it up with Bitcoin. Yeah, and they're doing it out of their free cash flow. So it's not like a treasury strategy play, but it's good to see that the gold bugs are getting on board.
I wonder what Peter Schiff thinks about it. He seems to have been coming around a little bit lately.
I think Peter's
always been around.
I think Peter is central casting for Bitcoin.
Yeah, I think they're selling the gold for the Bitcoin. All right, you're up.
Yep. All right. Citigroup predicts $135,000 Bitcoin by year end, and they have a bull case of 199,000.
Yep.
Do big banks like Citi believe Bitcoin is here to stay?
I mean, it seems like their bear case in this report was like 65,000. And it also, they noted that 40% of the driver of Bitcoin price is the Bitcoin ETF. This is their modeling and their assumption. But I think this is, and you know, I think that's a steady sort of, I think they're diamond hands, the ETFs. I think they're smart value index buyers. They're looking for yield, and they're smart. I think they're good hands. I think they'll keep buying. So I think that this is like a little still conservative, but I think it's a respectable report. 135 on the high end in a conservative case, 199 on the high end in the bullish case. And it's really interesting to see them modeling it like a traditional asset and starting to think about it that way.
I think when Jamie Dimon's your boss, you have to be a little bit tempered in your predictions as well.
Sure. I mean, he hates Bitcoiners. That's what he said. But I do think they're coming around, and it looks like it is here to stay. I mean, I think the banks are finally getting that with the repeal of what, SAB 121 and all the crypto week and all the regulatory legislation going through. Let's move on to the ETFs. So Bitcoin ETF inflow streak ends as altcoins attract flows. So is this a breather or a rotation risk? What does the next 6 months look like? But what does this say about sort of, you know, Bitcoin versus crypto here?
To me, these are, I mean, I think a lot of the ETF holders are new to Bitcoin. This is like the easy button for them to get exposure. So their first foray into the crypto markets for the most part, and they're going to get caught up in the same altcoin hype and a blockchain, not Bitcoin. They're going to get caught up in that, and they're doing the rotation. And so this is typical of the end of any cycle. And now we're seeing it play out in the ETFs.
Yeah.
And so to me, this is what happens when people get involved in the space. They fall in love with Bitcoin. They think this is going to change everything. They think blockchain is the solution. What else can we do with it? They go down the altcoin rabbit hole. They end up losing money.
How much of this do you think is I think this is like a rotation into altcoins like we've seen before. But I do think that this is people positioning themselves around sort of the stable coin market and the rails that they are speculating on.
Sure, but
That's what I think
if
is
that's why
happening.
they're buying, say, a ETH ETF, is because they believe stable coins are going to be coming out of the ETH protocol.
Something to that effect. And
Then-
I'm not saying that's a good bet or Bitcoin, not shitcoin.
What
but
they haven't learned yet is they haven't priced everything in Bitcoin.
sure. Yeah, I get that.
Price any altcoin in Bitcoin and see where it goes over more than one cycle. And you just learned everything you need to learn about altcoins. So
Yeah, we'll see how that plays out.
all right, next question. Pakistan and El Salvador partner on Bitcoin initiatives. This is pretty interesting. Could Pakistan follow El Salvador's footsteps?
I think they might actually go way bigger than El Salvador in different ways. So they're looking, Pakistan is saying we have a really young population. They're already very heavily interested in Bitcoin. 40, 50, 60% of the population is under 30. The demographics will leapfrog Bitcoin adoption in Pakistan. And they're also looking at stranded and unused energy. I think they have a lot of unused energy in their network. And then they're looking at methane and stranded methane and gas. And all these things just make sense at a really base level. Why meet, with Bukele to discuss this? I mean, he's a little bit of a trendsetter and he could but there's so many people around the world that could have chose to highlight this story.
Could this be the first alliance of
like a Bitcoin alliance?
Meaning small countries that are tortured by the IMF?
I think the IMF put them in touch. That's what the article said. Not that they're both. This is both sort of the IMF pushing them to figure out ways to enhance their economies. So
the IMF put them together.
I think according to that article,
I thought
the
they
IMF
came
put them
together.
Not in defiance of.
Really?
Yeah, I think. So that's why it's like weird and all these, but at the same time, maybe above the bit table they're like the IMF put us together, and below the table they're like fuck the IMF. I have no idea.
Right.
We'll see.
Well, I don't know. Let's go. Let's get some more countries on the bandwagon.
Bitcoin miner Bitfarms plans 10% stock buyback. Miner confidence or defensive move to prop up the stock?
Defensive move to prop up the stock, and I think long-term bad move. Like Mara today just announced a massive like $950 million raise to buy Bitcoin for their balance sheet, right? Like the choice was, do we buy back our stock, or do we
go buy Bitcoin that we know will go up in price? Probably
right?
Not
exactly
over long term.
So to me, this is actually a very and this is just a guess, but what it signals to me, and I could be completely wrong, is that we're not confident in our ability to mine Bitcoin competitively, but we are confident in high performance compute. And we think converting to AI and energy management and all the other things that these big Bitcoin miners and server farms can do, they're going to be able to get better value. Whereas if you had
they sold the stock for capital for expenditures to buy equipment to go run.
No, they are buying back their stock.
Right. Oh yeah, they're buying back their stock.
They're buying back their stock to drive the share price up because they think they're undervalued in the market for their high performance compute. Which there's cases to be made that somebody who's Bitcoin mining and doing AI and energy management is going to be better valued as a security. But if you compare that to a super efficient, low cost miner that's also buying Bitcoin to add to their balance sheet, I don't think it's going to compare.
I wonder if it's the first test case though of the sort of the MNAV dilemma. Do we buy the stock back? Let's move on to the next one, but make sure to like and subscribe if you're watching and tuning in so you missed us. You never miss us. All right. So
Japanese AI company to acquire 3,000 BTC for the treasury is the treasury company battlefield United States versus Japan now?
It does seem like Japan is playing a large outsized role in this Bitcoin treasury movement. You hear that this firm is buying 3,000. Now they're buying it over the next 12 months. So they have a certain amount of capital, I think, that they have set aside. So it'll be interesting to see, because I always benchmark it, the whole DCA versus lump sum. Whatever price it is when you decide to DCA, that's your benchmark, I think. Like, do we get more or less over time by doing this? But 3,000 Bitcoin is like $350 million. So it doesn't sound like they're going for a lot of Bitcoin over the next 12 months, but it's still a sizable outlay.
Yeah, and I don't know how big that is relative to the size of their company.
Sure, but it's not chump change to any company, really. So I think it's interesting, and Japan looks like they're starved for yield. We're hearing that from every direction. So Bitcoin's an obvious play in their economy.
I'm surprised there's not more companies doing this in Japan, because if you look at the yen and you look at the interest rates in the Japanese government bond market and what potentially could happen there in an inflationary / stablecoin world, right? I think these guys are super, super smart, that they're preparing for the future. They're putting a life raft underneath their company when the yen revenue is about to get just become a massive melting ice cube. So I think you're going to see more of this. It's just getting started in Japan. I don't know if it's necessarily a battlefield. I just think it's a very fertile field.
Well, there's a limited amount of Bitcoin, though.
Right. It's a very fertile field for this type of operation.
Yeah. So we'll see.
All right.
Let's move on to the next one.
Oh, where the heck was I? Yeah.
Yeah, I'm a little torn too.
You're asking me now.
So oh man, I always screw that one up. So is it the Gallup survey?
Yes.
Yeah, Gallup survey. 14% of Americans own crypto. 60% not even interested. Genuine skepticism, or we're still so early.
We're still so early.
Yeah.
I mean,
it is a great poll.
It is a great poll. And the key takeaway here, right, is we went from 1% to 14%. That's massive.
I think the key takeaway is 60% not interested. That makes me so bullish.
So bullish, right?
Very bullish.
But that is huge growth. If you were taking this poll in 2020, it would have been.
But it shows how
tiny.
little penetration in hearts and minds.
Yeah.
That is still to be won, and that's a lot of.
We're monetary nerds.
Yeah, but it's so ahead of the curve in that respect. Most people don't even care about this thing. They have disdain for it. They don't want to hear about it. They want it to go away still.
Yeah.
Like imagine in 1997 being like, I just wish email would go away. I don't want to do this. All
right. Next question. The Genius Act. The Genius Act doesn't allow tether, and this surprised me. I didn't really. I'm still not sure if this is.
This is the onshore offshore dilemma. I think
the Genius Act doesn't allow Tether to use its 100,000 BTC as USDT backing. Will Tether sell some of its Bitcoin to meet the Genius Act requirements?
I don't think they sell it. I think they they buy treasuries to back what they're going to issue in the States.
So
they also want to issue a new coin. There's a part of it that there's another coin being offered.
See that?
But not just
like a US. See, I thought this was originally going to be a US version of Tether and then an offshore version of Tether. But I'm concerned now that may not be the case.
Well, I think there is going to be the two versions.
But then why can't the offshore version have Bitcoin backing?
I think the offshore version will. The onshore won't.
So this is just going to apply to US based jurisdictional
usage of stable coins.
USDT.
Right. Now, if you have sort of
that.
different no, we're not. We're still figuring this out, but I think that's where it looks. And they were like, "Are you going to be okay with it?" They asked, I think, Paulo, and he said, "Look, we made 14 billion last year. We're going to figure this out."
If that's the case, I don't think if they're going to have a different coin in the United States, meaning the backing of USDT in the US is just treasuries, but offshore is treasuries and Bitcoin,
or just Bitcoin, maybe
that's going to be a very interesting dilemma over the long run, based on the way Saifedean explained it at Bitcoin 2025 in Las Vegas, where you now have an offshore dollar that could potentially have stronger purchasing power than the onshore dollar.
Yeah. If that purchasing power is passed on to the token holders and not just captured by the entity.
Yeah, but it would just be a stronger currency, right? I think over time it should happen.
Yeah.
So
more to come there.
To be seen.
Yeah. All right. U.S. Treasury Department is now accepting Venmo and PayPal payments from those who want to donate money to reduce the nation's $36.7 trillion
Oh
debt.
my God, this is so crazy.
Are they mocking us?
This is just proof of marketing for Venmo and PayPal. This is actually a 30-year program. You've been able to. And I learned this today
I hear
researching
you.
this stuff. This is
It's
ridiculous.
like when you go to the supermarket
For
and
the
you top
last
up.
30 years,
Yeah.
you could send a donation to what's it called?
Well, you've always been allowed to send donations. All of it's a donation.
Yeah. So in the last 30 years, they've collected $67.3 million in donations.
How many years? 3?
30.
30. Yeah. So.
Okay. So, but here's
But
the
people
kicker.
do it.
Here's the kicker. The U.S. debt is growing at over 45,000 per second. And therefore, in 24-hour period, the U.S. debt is growing at 3.75 billion per day. So over the course of 30 years, they basically collected enough money to pay for the debt from like when you wake up to breakfast.
Right.
on one day. And it took them 30 years.
It's mind-boggling.
It's a joke. And so you've been able to make donations any number of ways, and now you can use Venmo and PayPal. So this is nothing news. This is.
Do you think this will not, to the government, but I bet you that we get 67 million in donations in 3 years now because of this.
No.
Instead of 30. Something like that. There'll be some factor.
Our taxes are a donation.
Yeah, but this is like tipping.
It's like,
this is how like tipping's kind of got out of control, and everyone tips a lot more than not everyone, but like when you're at the.
No one's donating to eliminate the treasury.
Yeah,
the debt.
well,
No one's donating. I don't even understand where the 67 million came from in 30 years. Okay, where are we at?
I think
Fidelity.
Yeah.
Wait, right? Yeah, Fidelity. So Fidelity is going to be the first Bitcoin ETF for in-kind redemptions. Good job, Fidelity. Why now? What's going on?
I think it's to bring in your Bitcoin and or just buy Bitcoin there. I think that's a really attractive thing, especially for generational wealth. That for some people say, okay, grandpa can buy the ETF and the grandchild can one day take out Bitcoin.
Yeah,
into self-custody. So and hopefully there's no tax implications there, and hopefully it's not just for institutional.
I hope not.
Players.
I mean, first of all, I congratulate Fidelity for taking the steps to do this. Hopefully, it's going to becoming a more competitive space where more and more stuff like this.
But also,
happen.
you got to think defensively. So they can allow in-kind redemptions now. You put your Bitcoin in there or your money in there, and then they close the gate one day and they don't allow.
I don't know. I haven't read the fine print and the prospectus.
Well, they could change the prospectus. Sure, is what I'm saying.
Sure.
So that's just what like. It's not self-custody. I'm not saying people should do this. I think it's great that Fidelity is doing this. I think institutional trust will happen in Bitcoin, like it's happened in every other facet in the modern Western economy. But
here's an interesting one. So I was just re-listening to our panel discussion in Tampa with Chris Sullivan and Tom Luongo.
Yeah.
And Chris dropped a very interesting bomb in there that I think a lot of people missed. So watch it if you haven't seen it. It's him describing that the DTCC set up a subsidiary to custody the Bitcoin in the IBIT ETF. It's in their prospectus. And he pointed out the page that it was on. So watch that and go do your own research.
Does the DTCC do that with MicroStrategy shares or Microsoft shares, right? They set up an individual.
All the securities.
So isn't that sort of normal? Like, why is that notable?
That's notable if you watch The Great Taking.
Yeah. Okay. I haven't seen it.
Watch that documentary and you'll understand that everything that the DTCC holds.
Sure. So it's just like the other things that can be confiscated. It is like the other things.
It is the easiest 6102 attack.
Right. Yep.
In the time of a crisis that you can imagine.
All right. Yeah. Well, I agree. Check that out. Please like and subscribe. This is BitcoinCenter brought to you by Byte Federal. Go bank yourself. I think we have one more topic left. The EU's MiCA rules now fully in effect. Could MiCA become an imperfect bedrock that drives long-term Bitcoin adoption in Europe?
I do think it's going to help, right? Regulatory clarity helps people conduct crypto business. So, the beauty of this is that it is a standardized regulatory environment for the European Union. Whereas like here in the United States, every state's got different rules and regulations. So like we're dealing with 50 different regulators, 50 different compliance protocols, et cetera. So I think that we're on that path with the Clarity Act and the Genius Act and others. Europe got there with MiCA. From what I understand, though, it does support the bigger players more than a startup.
Yeah,
it's not going to be easy and affordable for small companies to get off the ground in the crypto
it's not
space
great
there.
for like the relays, but it's good for Coinbase. Yeah,
but regulatory clarity is helpful in regards to building your business. So
yeah,
I think that's a win.
Yeah, wins are good. Everything's good for Bitcoin. Thank you again for joining us on Bitcoin Center, brought to you by Byte Federal. Please like and subscribe on YouTube and on X to follow us there. We're live at 8 p.m. usually on Tuesday nights. Tonight's an exception. I'm Cedric Youngelman.
I'm Paul Tarantino. Go bank yourself.
Thank you so much for tuning in. See you next week.